market earlier on. We had some very interesting price action unfolding for us, some opportunities, and also a few other challenges. But what I want to do is just take you through the setups that we had for Hang Seng 50, or rather how Hang Seng 50 unfolded this morning. So what I have here is the Hang Seng 50, and earlier on, with the guys who are who subscribed to the year-long course, we were looking at this particular market. It sold off since the morning. When we were in the market, well, let's have a look at the daily first, just to show you what the daily looked like. At the present moment, we are waiting for opportunities. There's nothing that is set up, so I will have a look. I'll show you exactly what I'm looking for at the present moment. We just Hang Seng 50. We didn't have this huge bear candle at that particular stage, so we looked at the 3 candles and coming off the 10 EMA and that big round number, the 17,000, we were looking for opportunities to jump into the market. But as we were trading the open, that's what I want to point first. We're trading the open. So for those who've sat through the actual course, we know there's 4 strategies that we trade, and the first 3 would have been looking for them here, first, second, and third candle, and nothing set up for us. There was a problem here, which prevented us jumping into this particular trade. Then we're looking for the 4th strategy, which would have been a double top or a wedge top or a reversal of sorts. If we're going to short, or if we're going to go long, it would have been a double bottom, double top. That didn't materialize here. We ended up with this trading range, and the market just kept on creating failed breakouts. Bulls were trying to create a double bottom this particular stage, and we saw this wedge being formed, and we thought there would be huge acceleration on this candle, failed breakout, tail on top the next candle, and we kind of said as we were starting to work towards the end of the session, if we get a double bottom, which this candle became, then we want to come and see a higher low for us to trade. Now, a couple of candles later, remember I always talk about separation, 3 candles later, that's a little bit too early. You need at least 5 candles for a bottom or a pattern to hold. That was a wedge bottom, that's the double bottom there. So nothing set up for us. Now, one of the things we look for is probably something that was not in the course specifically. It's an advanced trading strategy. When a pattern fails to hold, then you can expect a breakout. So the double bottom that we're looking for acceleration up and a pullback and going up, did not hold. In fact, it failed. So when you have a failed pattern, failed bottom, then you can anticipate that there will be a breakout in the other direction. So it failed to hold. There was a breakout. And after the breakout, our 4th strategy kicks in again. Okay. Higher high double top, but it's a lower high double top. At the same time, so at the same time that is a lower high, it's also a double top. So perfect 4th strategy that we spoke about to jump in. And if you'd seen all of that, you'll have to wait. Market is creating wedge bottoms, breaks beneath it, pulls back, again coming off the 20 EMA, 10 EMA, our 4th strategy that would have been set up to take. Lower probability than this one because of the tails on top, which would mean, of course, just rely on your stop. Stop at the technical level will have to be above there. So we never use random stops. We always we talk like we did in the course of putting a stop at a technical level. So taking that, that's where the stop would have been, and that's what you could have relied on. Then the market sold off, and at the open of the UK markets, problem was you're right at the low of yesterday, so you don't want to do anything here. At best, you should be, taking your profits. That's what you should be doing, taking your profits, because you don't know the market's going to break out and carry on. This is a key level of support, the low of yesterday. So best just take your profit and wait for the next kind of setup. Now, where we are at the present moment, we now have patterns that forming at the low of yesterday. And whenever we have patterns forming at the low of yesterday, and it's not below the low of yesterday, so we haven't broken beneath the low of yesterday and held beneath it. Now they have bounced above it and holding above it. So a trading range is being created here. And whenever you see a trading range at a key level of support and resistance, breakout mode. Market is going to break out. And when it breaks out, all we want to look for is, again, our fourth strategy, breakout, pullback, double bottom, or double tops or wedge bottoms for us to trade. So we are waiting for this to unfold. When is it going to happen? Who knows? It might happen by the open of the US session. One of the things that I spoke about is the issue of the magnetic field of the first candle. There's the first candle of the UK session. And if you just extend that, even without worrying about its particular measured move, okay, we are within that magnetic field. So what are the chances that the market is going to end up like this for the next 8.5 hours that this market is open? That is unlikely. So there will be at some point an attempt to break out. There's a strong, they'll break out strongly. Then we just wait for the pullback and short, or the bulls break out. Wait for the pullback, double bottom, wedge bottom, whatever it may be. And we then buy. So that's Hang Seng 50. Bit of a slow start, for the day. Nothing set up here. If you just have a look, and when I do the so for the guys who are on the year-long coaching that have subscribed to it, at the end of the day, so I don't record the full Wednesdays at the market sessions. They just be long and waiting. But by the end of the day, I'll do a full deep analysis for you, and that will be posted on the Telegram channel, so you can just take your time to review it. What I want to point out, if you look at this, so we waited and didn't get a setup, which was perfectly fine. But yesterday was a beauty. Look at that same time period yesterday. Big gap up. Remember our strategies, our first three strategies, that were able to jump in here or here and just, really made good monies. One of the advanced strategies, which I'll talk to guys about in the year-long coaching, that's part of the process when we do our workshop, is how to trade the first candle in the agent session. Remember, I said at intermediate level, we never trade the first candle of the agent session. But in advanced stage, if everything is set up correctly, you can do that. So I took that trade and I was able to jump in a few times. And using the capital allocation model that I spoke about on the live trading profits show itself, and also in the course, starting off with a 0.25% risk. First trade, when the market moves away, you can then go to 0.5%, and you can then double to 1% and 2%. I managed to get to 2% risk of my capital somewhere within here. And the 0.25s, halves, ones were all at a profit. So by the time I was done and the market turned, I banked a cool 4.7% just on that. And that's part of, if I take off the first candle trade as an intermediate trader should have been able to bank comfortably, at least 2%. But when I do the video for you guys, I will put in the deep analysis. There's another shorter video that James is going to post to everyone on today, and you see what goes into that. Now, the other market that we spoke about in the live trading profits, sorry, in the Wednesday, the market agent session, and the setup has not gone the way that we anticipated to. So, it's sold off, and opportunities. Let me talk about what we were looking for and why we didn't take trades, and how, if you had not had that view, you would have taken trades and made some good monies for yourself. So when we looked at this on the daily, and by the way, someone has asked, what happens when you miss trades? Nothing happens when I miss trades. It's gone. I don't even worry about it. If I can't change my mind fast enough, then I don't worry about it. Now, on gold, there was no opportunity for me and the traders who sat through the Asian session, trading the Asian session, to change our minds, and I'll explain to you the reason thereof. We had a converging triangle. Remember, always look at the last 3 days. So before all of this happened, before the bear sell-off took place, we had a converging triangle. This is on gold on the daily. Whenever you see a converging triangle, breakout, higher probability breakout is in the direction of the last inside candle and its body. Yes, there are tails on top, indicating that bulls went up, but they were selling right up to the end. But with that converging triangle pattern, when you look at enough of them, I don't know, look at 100 of these patterns, you will see that the breakout that we want to look for is a breakout above in favor of the bulls, and breakout above to test some of these levels, whether to test the 20 EMA or to test this particular trend line level, which was a breakout point here of that, or to test the high of 13 October, when you had that CPI announcement. So anticipation is, let's wait for a bull breakout. And if you get a bull breakout, chances are the breakout to fail. And in the inverse of it, of course, it's never 100% certain. So higher probability was to wait for a bull breakout and attempt by the bulls to break out of the converging triangle, and would expect it to fail, and then find ways to sell. Alternatively, lower probability, which has taken place, is the bears break out beneath the expanding triangle. And if the bears break out beneath the expanding triangle, we didn't think it would get to that extent. Small breakout beneath the expanding triangle, then look for a reversal. So when I was in the session, I said, this is what we're looking for in terms of gold. And we drill down to the 5 minute. We'll do that just now. Have a look up here. Converging triangle. Higher probability that the breakout, even though we are tails, would favor the direction of the last inside candle. So there you'd have been anticipating a bear breakout, you'd have jumped in and traded it and made some good cash. Here, inverse of it. So when we went to the 5 minutes, we put in all our key levels of support, and it's interesting to put that in. So there is the converging triangle. There is the converging triangle that we had. So just now at a 5 minute level, we also marked the low of the outside candle, and low of the outside candle today. This was the day that was the outside candle. Outside candle, inside candle yesterday, and we were anticipating that converging triangle to hold, and we marked that high and that high in case after the breakout above this high, the market turns there or there, we would have been razor sharp ready to trade it. So the low probability event happened. We broke out. So at the when looking at the open of the European markets, there was the attempt to break out, and I was saying, oh, fantastic. So failed breakout of the converging triangle. It didn't break out to the top, as opposed to breaking out to the bottom, but failed breakout, maybe we'll get a double bottom of sorts and accelerate up. But instead, the failed, the bottom didn't hold. We had a breakout to the downside, then at the open of the, so, I mean, there was a trade opportunity if you're not bound by the converging triangle pattern that I was. So, and I wouldn't even have traded that because we said, let's not look at it until we get to the extremes. So we go to the extremes, broke out beneath it, huge bear breakout at the open of the UK markets, and then it failed. So I saw that and I said, well, that's quite fascinating. I mean, the bears have broken out well below the converging triangle lower highs, and they have an opportunity just to keep selling off, but why has they failed? So I was anticipating or thinking that the bulls would be strong to get back above the high of yesterday and look for double bottoms, but that didn't materialize. They got there, bounced off, went sideways, and now we just got into the measured move of this triangle, which is also a measured move of the first candle, the UK markets. So as it turns out, we can look back and see the opportunities that may be there, but because we're anticipating a certain pattern to hold, which is a higher probability out of 100 patterns, it will hold and you make money. We missed out all of those patterns, so we are in waiting mode for gold. I'm not doing anything at the present moment because now there's a pattern unfolding below the low of yesterday. Am I still bullish with the market? Not after the breakout beneath the low of yesterday. Yes, the bulls have tried. If they had closed above that particular, this has been a bull candle closing above the low of yesterday, I would have been a little bit more interested to stay long. So not interested. How about shorting? There's absolutely no ways you would have caught me shorting. Even here, I would, if I'd seen a lower high double top and missed it, I would have said, well, that's a good short that you'd have taken. That would have been worthwhile to take, but that didn't set up, and I don't short. You should never short in the middle of a trading range. You need just to wait. So broken out, got into the measured move, absolutely nothing to do at the moment because we are swing traders. We're trying to find these moves where we can make a ton of cash, like I showed you on that Langston 50 of early yesterday morning. So what I'm waiting for, I want to see if off this hidden level of support, the bulls are going to be strong, successive strong bull candles. Let's get back at least to the low of the UK markets, and let's see how much strength we have. Will it set up today the way I want? I'm not sure. We still have a good 2.5 hours to the open of the US markets, and I think it's a pretty straight run. I'm just checking. Well, yeah, it is. I don't see any red news announcements. So it's a pretty straight run until then. There's enough time, but let's wait and see. Point of this whole little discussion is, yes, sometimes we do miss trades if we're anticipating a certain pattern to hold. If it had held, we'd be smiling and saying, hey, look at how we made a fortune. Euro versus the dollar, let's have a look at it. Opportunities, if you had been trading this market, right from the open of the day. The magenta line is the open of the day. Not many trade opportunities here because you're selling into a level of support, but once you broke out beneath it, in kicks our fourth strategy. There you go, reversal at resistance. It's a lower high. That's a lower high. That trade you'd have to take, and your stop is always at. Look to your left. Nearest technical level is here, and you have the open of the day, so you can put your stop above there. If you didn't take that strong bear breakout, wait again. Decent enough setup. You don't know it's going to turn, but you must take the setups because it might just accelerate down. And then the market carries on all the way into the open of the UK markets right here. And if you had been holding onto your trades through all of this, when you see that opening candle, it's a doji, not a strong breakout, and we get to this two-bar reversal, I'm pretty comfortable just to close the trade. Remember, and I must remind myself to keep showing you this, my philosophy in terms of taking profit is pretty simple. There is always the technical level. Okay, so if you're taking a trade at this particular level, your measured move is down here. You can take your take profit, set your take profits just above this level, and that's perfectly fine. Or what I prefer to do is hold on to my trade and see if I can manage it for a little bit more. So if I've been holding on to my trades and I saw that two-bar reversal, I would have made less money than you because you would have been just have your take profit here and bank the cash, happiness. I would have made less profit on the hope, anticipation of the lower probability event that we might just accelerate down, which if we did, we'll be able to jump in close later. In any case, if you didn't take any of this, but after seeing this breakout and none of our 1, 2, 3 trade setup, so none of our first 3 strategies setup, you got to now wait for the fourth strategy. That's a reversal at some level of support or resistance. And we have within here a micro wedge, which I probably wouldn't worry too much about it if you can't see it at this stage, but the market went up once, twice, 3 times. Every time it went up, these tails are poses. So if you can't yet decipher micro wedge, don't worry about it, but you can see there's lower highs all in here. These are levels of resistance where you can be anticipating. Okay, so fourth strategy, waiting for possible reversals at a level of resistance, some form of a double top or a wedge top. So, count that, or if you didn't see that, we try to reverse here, fail, that should give you a sign. There's another lower high, try to reverse, tail on top, another sign that the bulls are failing. And then this is a lower high, but before the market turned there, we also have that high, which happens to be a double top with this high. So you can see a pretty strong level. When we got there, the market turned. Okay, so just these 2 candles, it's a micro double top, as we call it. So double top, just 2 candles apart. But it's also a lower high double top with that and a double top with that. So that particular trade you would have to take. And the only thing that you then have to worry about is where is my stop. And your stop, when you're taking that, there's multiple levels. Nearest one that you must just be cautious of is above the open of the day. So you take that trade. And again, if you want to just take your profits, it's key level of support, which is absolutely fine. And as a, depending on where you're at as a beginner or as an intermediate trader, I think if you just get in the habit of taking your profits as key levels of support, you will bank a lot of money and it will all add up. So you can say, okay, there is a key level. I'm going to just put my take profit just above it. And the market gets there, you would have banked your profit. If you didn't, you would have banked your profit at the next level. If you were George, however, you'd be saying, let me wait. Let me just wait and see. The market might just break out beneath that, like it later on did here, and give me an opportunity to bank a little bit more. And if it didn't, listen to about reversal, I get out. So I bank a little less than you, but I'm always anticipating that I might get one of these. Now, what is interesting about what's taking place here, this is all happening after the UK Open, and the market is holding until we try to break out beneath here. Market is holding above the low of yesterday. So the bulls are strong. They try to give us a double bottom here, and that counts. And coming off a double bottom, what we want to see is acceleration of it. We want to see at least a candle that is closing above the EMAs. We don't get it, but you can't be selling here at this stage. You can initiate a trade up there because easily you can get minimum 1-to-1. But if you're taking a trade here, you've got to just visually say to yourself, at the very least, can I bank 1-to-1? You can't here because it's straight into support. So just wait and let it go and observe. And, I was watching this. I was just hoping to see if the bulls are strong enough, because they're defending this low, defending, but they fail. Then, the market kind of sells off. So at this stage, all you got to do is wait for a little bit more information. What kind of information? Well, because now we are beneath the low of yesterday, that level, which was support all the way through here, is now a key level of resistance. If we are going to short, the first point of shorting is if the market comes back and tests that, then we know, okay, we have a double top of sorts, then we need a lower high, and if we get a lower high, we can easily sell and try and get to these lows. We don't want to sell down here, even if it accelerates further. We don't want to sell down here because this breakout is not strong. Why do I say it's not strong? We've got some lows that we created all throughout. So at some point, if we just look at this, before this happened, this was the low of the day. Bulls tried to break out beneath it, failed. Then we had a new low of the day, which was that low. And we had a 3 push pattern, a wedge, market trying to create a wedge bottom. We then had this bear candle closing beneath that low of the day and just at the wedge. The breakout candle was this breakout candle. Whenever you see a breakout candle, you want confirmation of the breakout. We didn't get confirmation of the breakout. When you don't get confirmation of the breakout, any other setup that you see is a low probability trade. Could you take the trade, George? Would be a good question. Excuse me. You can take the trade, but your problem is where do you put your stop? And the problem is based on not just a technical level, but can I get a 1-to-1? So if you're taking that and say, well, I'm going to take that put or trade, you can't put your stop anywhere near. This is not a technical level, it's trading range price action. Your stop has to go all the way, to the last lower high. And that's the correct place to put a stop. If you're prepared to put the correct stop in the market, perfectly fine. And that's going to be the caveat to all trading. And the minimum you'll be going for, you got to be able to see the potential minimum for a 1-to-1. So the potential minimum for a 1-to-1 is down here. So you can happily take that, put your stop up there, and just wait for it to get down. It might get down there in one candle and say, boom, I've banked my 1-to-1. Now, and that's perfectly fine, but don't go and take that trade and say, well, I'm just going to put my stop here and hope, I would have gotten 1-to-1 at that level. You are not trading price action. Trading something else, which if you've tested it, might work fantastic. But as far as price action, we don't put a stop above a trading range, because market can just bounce you off, come and test, and you are losing money unnecessarily. So that's where you would put it. So yeah, we are beneath the low of yesterday. If the market continues to sell off and comes back, then we can look at testing this trading range and seeing if we get a way to jump in. There is always trades in the market. If you take that kind of trade and the market starts to pull back against you, you have to wait until you get to a place where you know your stop is going to protect you. You know, you can't take that kind of trade, goes against you, then you close the trade because it might just accelerate down. Once you've worked out, so the problem with a wide stop, you've got to be comfortable with someone. Take my trade, put the stop, go away. It may take me hours to work out, but that is perfectly fine. So euro, I'm waiting to see if we get come back here and test that double top lower high, and happily I can sell it off. If the bulls show strength, I'm not buying into that level. I'm going to have to wait for the market to break out above that pullback, and we can go with it. Let's just have a look. Gold, well, as you said, we're waiting. It's one very quickly to see what happened in the last few minutes. Nothing much, or not nothing much. The bears are not breaking beneath that measured move or the measured move of that first candle. So the bulls are defending this to see if the market can go up. So we need to wait to see who's got strength. Still a prime market for us to look for opportunities to go short. Now, while we were here, we could not sell because of this level of support. But now that the market has moved down this way, if we get back up to these levels and we test that level, and we get a kind of two-bar reversal like that, then we must jump in and take the trade and be comfortable, put our stop up there, because we would have room for a one-to-one. Let's have a look, just have a quick look at UK one. Okay, UK 100, just very quickly, right from the open bull candle wedge, etc. And you're trying to find ways to jump into the market. And after this wedge and the bull acceleration, the first opportunity will be a lower high. And that's probably the first lower high. But it's a low probability trade because you're selling into the open. If the open was down here, you'll be able to do a one-to-one. So let it go. Do not worry about it. Watch it. Trading range, tight trading range at the open. So this tight trading range at the open is what were we talking about earlier? Right. Okay, good. So you see this tight trading range that we have here. Around, so this yellow, this started here. This was the open of the UK markets. We've had a tight trading range around that open. And we've kind of said, if you just look at the low of it, that's where we are. Try to break out, so we have a double bottom, but the market is creating a tight trading range. And I said that a tight trading range is breakout mode. You just have to wait, pencil sharpened, calculators ready, wait for the breakout, pull back and trade. Now, if we go and have a look, keep that in mind, if we go and have a look at the UK 100, this same thing took place here. We got back to the open of the day and a tight trading range was created. So if we had been looking at that together, I would have said, well, we're in a tight trading range at the open. Just wait for the market to break out of that. And that's the kind of thing that we want to do. So we wait for that. Tight trading range, you keep looking at it, keep looking at it, keep looking at it. Eventually, there is a strong breakout beneath it. Okay, there is a breakout candle, follow through, then a pullback, fourth strategy, boom, take the trade. Okay, and when you take that particular trade, where do you put your stop? Your stop has to go to the nearest technical level. That high is nearest technical level. Perfect area to put your stop because it's also just above the open of the day. So if you are taking that, you haven't seen all of this stuff. Here's the measure move tool. So you're taking the trade within here, and you are banking that the market will accelerate down and get to this level. This level is a big round number. That's a gap up level support. Let me show you that. That's key. Should have mentioned that. So whenever you open your charts and there's a huge gap up, okay, and you see that huge gap up, and you say, hang on, gap up, bull candle, first candle, good for the bull, but then why do I have a bear doji? You wait for a pullback and try and find ways to jump into the market. But whenever you have a gap up or a gap down, you need just to mark in another color the gap up level. Okay, so I just plonk in the gap up level, and I say at some point, today, tomorrow, that level where the market gapped up or gap down is going to be tested. And when it gets tested, I just want to be aware of it because a pattern might form there. So one of the things that we spoke about in the course is just be aware of what price action is doing towards the levels of support or resistance. Just be aware that something good might happen. And in this case, something good happened. So key level breakout, then you don't worry about it. But when you get in here, you say, there's a key level gap where the market gapped up. If I want to set my take profit, I'm just going to put my take profit above that key level and bank my profit, 1-to-1 or just less than 1-to-1. Or if I want to hold my stop up here, I see the market has gone down, come back, it's gone down. So that now becomes a technical level for you by the time the open takes place. One of the things that I have said a few times is when you're going into the open of any market, you have to kind of think of it as you have to think of the open as red news. Just if there's a news announcement, you always have a decision to make. One red news, apply a 30-minute factor, and say, okay, there is like when we had the CPI news last week, there were like 4 news announcements in the same time zone. If you take those 4 news announcements and multiply by 30 minutes for each one, that's 120 minutes, 2 hours before that I am out of the market. Okay, if I stay in the market, I've made the deliberate decision that I'm going to stay in the market. If I get stopped out, or if there's slippage and my 0.25% becomes 2%, I must be able to go and slip and not beat myself up. Okay. If you can't do that, then just stay out of the market. So at this stage, you could have said, well, you know what, I'm going to just hold my stop at the technical level. And that was the first trade that I took. It's a 0.25% risk. I've tightened it now 0.125%. So I'm happy to lose out even with a little bit of a slippage at the open. You get rewarded by this bull candle. Now we go back into the strategies that we trade. First candle, second candle, third, or the reversal. First candle, outside candle, you kind of say, let me wait. I'm not going to trade the outside candle. Second candle, back candle, fantastic, but it's a breakout candle, not an inside candle. So I'm going to wait for the third candle. If it's a bear reversal candle, this is not, then I just wait for my fourth strategy. I mean, this was as classic as the strategies that we went through in the course really unfolded for us. There was the fourth strategy, the reversal strategy, 2-bar reversal. of failed breakout above the 20 EMA, failed, it's a test of the 20 EMA, it's a lower high, you've had lower highs taking place, and then strong bear breakout at the open. And the goal is to get, the bears want to break beneath the low of yesterday. So you can take that particular trade knowing that you can get at least your one-to-one. So you're taking the trade here, and there's your stop at that level, just above. So just before that, you can get to one-to-one. And if you're comfortable, which at an intermediate level, you should be happy to do, I'm just going to put my take profit above there. I will forego all this extra bonanza that George wants to get. So if you bank your profit, absolutely fantastic. If you want to hold on to the trade, as I like to do, and now I got to be thinking and saying, okay, next candle, try to break out, failed. Bull candle, tails on top. Okay, bull still weak, hold on. And I'm ready to close the trade. Doji, tails, bear candle. And I'm going to say, okay, I'm not touching my stop at all. I'm just trying to manage and see if I can get a little bit more out of the market. Then you get rewarded by this. Now, when you get rewarded by this, you don't start selling again because the objective has been reached at this particular stage. So you're trying to see how much you can optimize that to get tails. You wait, and I would have closed it above there. So, I don't know how much that would have been. Good money, go buy a nice meal or something, but then it gets erased. But above there, I'm not going to wait for tests because I know I've banked a little bit extra. Oops, a little bit extra than I would have banked. So that's how I would manage it. But just work on the take profits. This is a classic. I will elaborate a little bit on this in the video summary for the day. So just a couple minutes to go. Let's just S&P 500. Okay, so there were some trades I'm just going to point out. Now, this is a classic. Many times I say, see a double top or see a double bottom and go for a lower high. That would have been a perfect lower high. And then you just wait, because the key level is here, the low of the day. Even that's open, we still have been able to give you a one-to-one. And you could have banked your profits. Then we have a break beneath the open of the day, get to the low of the day, pull back. Fourth strategy, take that. If you're not comfortable with that, wait for the other lower high, you take that. At the open, a little bit more complex than the UK open. I'm only saying a little bit more complex because the candles are not as crystal clear here. But that's the open, and nothing for us trade now first, second, but there is a reversal. Okay, lower high of the 20 EMA. That you've got to take. You've got to try and take that trade. And if you didn't take that, here's another fourth strategy. You take that particular trade, go take your profits at this channel line, or if you don't take your profits there, you try and manage it like I do, and you bank. Now, we are at the end of the show. What do we look for here? We're just going to have to wait for double bottoms, like with a double top here. If we get it, and a lower high, if the bears close beneath this, you put your measured move in and see how far we go. All right, guys, thank you very much for your participation. A short video will be released by the team to everyone, but detailed analysis will be posted on the Telegram channel by the end of the day for all the subscribed traders. Really appreciate it, and thank you very much. Take care, guys. Cheers. See you later. Bye-bye.